Welcome back. Take a look at the futures this morning. Mixed story going into the big CPI number. Dow Industrials right now up 41. The Nasdaq is lower. It's down 2.5, and the S&P higher by just a point. Fractional moves here. We are looking at interest rates, meanwhile, hovering around 4.3% on the 10-year. Take a look, unchanged at 4.36% on the 10-year yield. Now, the March Consumer Price Index is out in 2 hours' time, 8:30 a.m. Eastern. The expectations call for prices to be up 0.3% month to month and 3.4% year over year. That's well ahead of the Federal Reserve's 2% target, of course. Joining me right now is the Fitz-Gerald Group principal, Keith Fitz-Gerald. Keith, good to see you. A lot of people waiting on this number after those hot readings that we saw in January and February. What are your expectations?
Well, I think, and good morning. I think it's going to be a lot hotter and stickier than people realize or are prepared to recognize, frankly. We've been there, done that, even got the T-shirt, Maria.
Got the T-shirt to prove it. Carol Roth, jump in here. What are you going to be zeroing in today on this number? How important is it from your standpoint?
So I have a very contrarian take, which is that the number sort of doesn't matter because I think the Fed
Bingo.
is between a rock and a hard place. And I know Keith and I are obviously aligned on a lot of things and have been for a long time. But you have to look at where the trajectory of spending, deficits, interest is going. And at some point, inflation is going to peak or continue to go up whether or not the Fed cuts. And I think that the fiscal dominance, whether we're in it or we're heading there, is making it impossible for monetary policy to do what it is that the Fed wants to do. I don't know if Keith agrees with that or not.
Keith?
I do. I think the Fed does not have a rates and labor problem like it thinks. The Fed has a fiscal problem. Until the government spends responsibly, they may as well be taking blood out of their left arm and putting it in their right.
Oh, God. Well, you say the Magnificent Seven stocks will have strong earnings releases. Here we are at the beginning of the first quarter earnings season. Keith, how does this play out?
Well, again, this is the interesting. People constantly hunt for strong stocks, look for pockets of the economy that are going well. Well, if you line up with the great big themes that are moving our world, I think those are still going to be the stocks you want to pay attention to. I think the numbers are going to get a little rougher. People are going to begin to focus on operations. But don't forget the investment in forward-looking guidance, I think, is going to be a lot stronger than a lot of people think. So I'm looking for good numbers here.
Well, Adam, we've started the earnings season.
Yes.
We'll start on Friday with the major banks. That's where the focus turns in the coming weeks. What do you think about it?
Well, the banks set the tone because, money is what makes the world go round. And if the banks are making money and doing well, that bodes well for the rest of the economy and certainly earnings as a whole. If you look at consensus estimates right now, it would suggest that earnings are going to be up only about 3% year over year for the quarter that's going to be reported starting Friday. Well, actually, if you look at the past 2 quarters, not only have earnings come in at the estimates, but they've actually beaten by 7%. So if you add 7% to the 3.2, right, it gets you to about 2% growth, which I think is a theme that we are going to see more of, that earnings are going to be better than expected, that we have double-digit earnings growth as we get into the middle of the year. And I think that argues for earnings for the S&P 500 getting up to $250. You put a 20 multiple on that, you get to about where we are. So I think actually the market is reasonably priced for what's happening with earnings.
Reasonably priced going into the earnings season. You agree with that, Keith?
I do, absolutely. I think Adam's spot on. He makes all the right connections. I share that perspective. So it's great to have nice company.
Thank you, sir.
Talking about Boeing in particular, a whistleblower claims that Boeing took shortcuts during production on the 787 Dreamliner. The company says the claim is inaccurate and is confident that the safety is there for its planes. Departing CEO Dave Calhoun is set to testify on April 17th to examine the plane maker's safety culture. The stock obviously has taken a huge hit in the middle of all of these accidents. Your thoughts on Boeing right now, Keith?
I think we're looking at the end of Boeing as we know it. I see the prices dropping into the 150 range if they don't get a handle on this. Anecdotally, we're hearing that, here in the local market, which is obviously Boeing's just down the road here, we're hearing people won't want to hire Boeing maintenance tech. We're hearing people getting challenged because they've worked at Boeing. We're hearing anecdotally, every time I fly out of Painfield or Seattle, I see lots of Boeing aircraft on the runway, on the tarmac, that are not being delivered. So public confidence is getting rattled here. I think they've got a monster opening in China that is looking at it very carefully in the global transportation market.
So do you want to own stocks going into all of this? I mean, look, the market is expecting still 3 rate cuts, Keith. It may not materialize. A lot of debate on that. that. We're going to talk coming up with Jim Grant, who said the Fed may be, moving its inflation target before it's actually partaking in 3 rate cuts. So what do you want to do going into the earnings season and the potential rate cut to come in June or July, if in fact we do get there, Keith? Because if we don't get 3 cuts, won't that be a big disappointment for the market, sparking a sell-off?
Well, number one, that's a very sharp question. Number two, I think that what we want to do is you want to do 2 things. One, you want to be quality names only, so big name companies you want to own regardless of the turbulence. 2, you want to look for those pullbacks and opportunities where you can line up with the big themes. So if you're playing with the Pelotons of the world, forget it. If you're looking at the Apples and the Microsofts of the world, those are the stocks you want to continue to evaluate. If you get a nice pullback, maybe buy some more, add to things that pay dividends, fuel, dinosaur juice. Those are all things that are going to be with us for a long time.
All right, Keith, great to see you this morning. Thanks very much. Keith Fitz-Gerald joining us. We will have that CPI number in 2 hours' time. Quick break. House Speaker Mike Johnson convinced to hold off on sending Alejandro Mayorkas impeachment articles to the